A new U.S. tariff threat, this time focusing on Canadian fertilizer.
A lot of it does come in from Canada, and so we'll end up putting very severe tariffs on that if we have to, because that's the way you want to bolster here, and we can do it here.
A major shift is happening in North American agriculture, and most people still do not see it clearly. Donald Trump threatened very severe tariffs on Canadian fertilizer, but the real story is bigger than one threat, one press line, or one tariff headline. The deeper problem is that the United States is threatening a farm input system it still cannot quickly replace. Reuters reported in March 2025 that American farmers were already facing higher costs and weaker margins because new tariffs hit inputs from Canada, and that about 85% of U.S. potash fertilizer imports come from Canada. That is the first thing to understand. This is not just another Canada-U.S. trade quarrel. This is a pressure point inside the American food system itself. Because potash is not some optional industrial product sitting on the edge of the economy. It is one of the essential fertilizer nutrients behind American corn, soybeans, wheat, and many vegetables. Reuters reported that fertilizer cost increases from tariffs were hitting U.S. farmers at the start of the spring planting season, at a time when many were already bracing for another weak income year. And here is the structural reality Washington cannot tariff away. America does not have enough domestic potash. That is not mainly a policy problem. It is a geology problem. The United States does have domestic potash mining, but not at the scale, cost, or speed needed to replace Canadian supply in the near term. Industry reporting and analyst commentary cited in Reuters' linked coverage say U.S. buyers remain heavily dependent on Canadian potash, with very limited alternatives because Russia and Belarus are geopolitically constrained and domestic U.S. capacity is too small to fill the gap quickly. So when Trump threatens Canadian fertilizer, he is not just pressuring Canada. He is pressuring a supply relationship American agriculture still relies on. That changes the whole meaning of the tariff. Because the old political script says tariff the foreign supplier, protect the domestic producer. But potash does not work like that. If domestic supply cannot replace the imports quickly, then the tariff does not suddenly create self-sufficiency. It mostly creates pass-through cost. And that cost lands first on the farm. Reuters reported that fertilizer producer Nutrien warned Trump's tariffs on Canadian imports would increase costs for American farmers. Reuters also reported that U.S. farm groups warned the broader tariff structure would hit farmers through both higher input costs and weaker export conditions. That matters because this is not happening in a strong farm economy. It is happening in a weak one. Corn and soybean producers have already been dealing with tighter margins, weak prices, and rising production costs. Reuters reported that many U.S. farmers were at risk of losing money for a third consecutive year, and that the new tariff environment was making fertilizer bills even harder to absorb. So let's slow this down and look at the mechanism. Trump threatens or imposes tariffs on Canadian fertilizer. Potash prices rise or remain elevated because Canada still dominates U.S. import supply. Farmers buy fertilizer months before planting, so the higher input cost hits current farm planning, not some distant future season. Crop prices, however, are not something the farmer can just raise at will. They are market set, so the margin gets squeezed. That is where the crisis begins. Not first at the grocery store, first in the farm budget, then in planting economics, then in profitability, then in how the wider food system absorbs those costs over time. This is why everything about this matters. Let's look at the idea carefully. It is not that Carney has physically turned off a valve and stopped potash from moving tomorrow morning. It is that the Trump tariff strategy has turned Canada's already existing potash dominance into visible strategic leverage. That is the real shift. Trump's pressure has exposed how dependent the United States still is. And once dependence becomes visible, bargaining power changes. That is where the Canada angle gets more interesting. Because Ottawa is no longer behaving like a government that assumes the US market will remain permanently open, stable, and low friction. Reuters reported in early 2026 that Mark Carney wants a trading order less reliant on the United States, and that Canada is actively trying to widen its options beyond one dominant partner. That broader strategy matters even in potash. Why? Because if Canada no longer assumes the US is the only secure long-term destination, then Canadian producers and policymakers start thinking differently. They think about more diversified export exposure, more bargaining room, more strategic use of scale, and less automatic deference to US pressure. That does not mean Canada has escaped US gravity. It absolutely has not. But it does mean the old comfort model is breaking down. And potash is one of the clearest places where that breakdown becomes economically visible. There is also something else important: the timeline problem. Washington can talk about reshoring fertilizer production. It can talk about new mines. It can talk about industrial policy. But agriculture runs on planting calendars, not on political ambition. A new mine is not a switch. It is permitting, financing, construction, infrastructure, development, scaling, and years of lead time. That is why this issue is so dangerous for US farmers. The cost pressure is immediate. The replacement story is slow. And the gap between those two timelines is where the crisis lives. In other words, America can threaten Canada faster than it can replace Canada. That is the structural trap. Now let's talk about what this means for households. A lot of people jump too fast from fertilizer to grocery panic, and I would be careful there. The cleaner point is this: higher potash costs do not instantly explode consumer prices overnight, but they do raise pressure inside the food production chain. They hit growers first. They hit crop economics first. And when that happens across a system this large, the effects can spread into food price pressure over time, especially when margins are already weak and multiple costs are rising together. So everything should not sound like tariff today, food crisis tomorrow. It should sound like tariff now, farm squeeze now, broader food system pressure building from there. That is more of the issue. And credibility matters here because the underlying story is already strong enough without exaggeration. Now, where does Carney fit in all of this? This is where I would diverge a little from the original idea. Carney did not create Canada's potash leverage. Geology did. Production scale did. Export dominance did. US dependency did. What Carney changes is the political context around that leverage. He is governing at a moment when Canada is more willing to think strategically about sectors where it already has structural advantages. That matters. But the strongest opinion does not say Carney invented the leverage. It says Trump's tariff war exposed leverage Canada already had. And Carney is governing in a moment when Canada is far less willing to ignore its value. That is the Tradeconomics framing. Now add one more layer. This is not just about fertilizer. It is also about credibility inside North America. Because every time Washington threatens a supply relationship it still depends on, it teaches Canada something. It teaches Ottawa that dependence is not safety. It teaches Canadian industry that the US market is still huge, but not fully secure. And it teaches both sides that the next North American trade fight will not be negotiated under the old assumptions. That is why this potash story is bigger than potash. It is a case study in what happens when tariff politics collides with structural dependency. The slogan says strength. The mechanism says exposure. And exposure is where the real power sits. So here is the real Tradeconomics take. This is not just a fertilizer story. It is a dependency story. Trump threatened Canadian potash as if the United States could simply pressure the supplier and move on. But the deeper reality is much harder than that. American farming still depends on a Canadian input it cannot quickly replace. That means the tariff does not stop at the border. It moves into farm costs, into crop margins, into planting decisions, and from there, into the wider food economy. That is the shift. Not sudden Canadian power, but exposed American vulnerability. And once a tariff fight starts revealing where the real dependency sits, the politics change. Because the issue is no longer whether Washington can sound tough. The issue is whether U.S. agriculture can absorb the cost of that toughness without paying for it first. So here is the question that matters most. Is Trump really targeting Canada, or is he taxing one of the very supply chains American farming still needs to survive? If you found this analysis useful, subscribe, share the video, and turn on notifications so you don't miss the next one. At Tradeconomics, we follow the markets first, then expose the power mechanics underneath. Because the real story is never just the tariff, never just the speech, and never just the headline. It's who pays, who gains, and how the system is shifting underneath it all. See you in the next one.